Back in 2021, Congress passed the Inflation Reduction Act bill, which included the requirement for the Treasury Department, the IRS, to put together regulations on cryptocurrency. It took them several years to come up with some regulations. The regulations they came up with are extensive. They're in excess of 200 pages of regulations. And the upshot, if we were to say what is involved with what they call the broker-dealer regulations, is an obligation is being placed on centralized exchanges like Coinbase, Uphold, Robinhood to issue a 1099 form at the beginning of a year to report the amount of financial activity the person had done and to send that to the IRS and to the taxpayer. This particular form is being called the 1099-DA for digital assets. I mean, we get 1099 forms all the time, particularly if you're a stock investor, you're familiar with a 1099-D, which basically lists everything you sold during the year. And most of the time, it's going to list what you bought it for. And therefore, this is your profit. And that's a wonderful form. If you're a stock investor, you just basically take the bottom line number off that and put it on your tax return, and your taxes are done. And crypto people would like to do that, but we just don't buy and sell on one exchange. We tend to buy here, move it over to a hard wallet, move it to another exchange. So it's very complicated. But what will happen with the 1099-DA is that, to the best of their ability, companies like Coinbase and Uphold and exchanges will have to report what they think the cost basis is of what you sold. So that's going to go to the IRS. This is happening now. They're monitoring your 2025 transactions. So come January of 2026, you will start getting these 1099 forms. And the more you trade, the more you buy and sell, the bigger those numbers become. And they can become quite scary because let's say you had $10,000, you buy a coin, and then at the end of the week you sell, you made a $1 profit, you sell for 10,001, and then the next week you reinvest that 10,000. You would have had 52 weeks of investing $10,000. That would look like $520,000 of sales. And of course, you didn't make that much money because you're only making $1 every week. It can be scary. Plus, you have to reconcile that against your gain calculation from all the other places that you're buying and selling crypto. So starting next year, gain calculation is going to become significantly more complex because now you're going to have to reconcile against these 1099 DAs. So that's the big issue.